Hello, welcome back. I'm joined by Segan Lawson, the CEO of Thor Explorations, and we're at Beaver Creek here in Colorado. Segan, good to see you.
Good to see you. Thanks for having me.
No problem. Just those less familiar, brief company overview, if you don't mind.
So yeah, I'm CEO of Thor Explorations. Thor Explorations is a West Africa-focused gold producer. We've recently transitioned from an exploration company to a producer. We're listed on the TSX-V. We're listed on the AIM market of the London Stock Exchange. We have our flagship gold mine in Nigeria, which is the first mine for us, but also the first of its kind in Nigeria, first gold mine in Nigeria. And we also have an advanced exploration project in Senegal.
Awesome. Okay, let's go on the mine. Like you said, it's the first mine in Nigeria at the moment in production. Can you just tell us a little bit about let's go into the actual deposit. What's the actual grade and the size and scale of this deposit as it stands at the moment?
Yeah, so the reserve is about 520,000 ounces. Head grade is just over 4 grams per ton, 4.02 grams per ton. And the mine life is an initial 5 years where we are. We have a larger global resource, which will obviously be trying to convert from resource to reserve to extend the mine life.
Obviously, it's 5 years at the moment, but you're within that 5 year, the payback's around 1 year at the moment. It's pumping out loads of free cash. Can you just run us through the actual economics of the project as it stands at the moment?
Yeah, that's right. You know, it's a high-grade project, very easy metallurgy. We recover about 70% from gravity alone, which means our all-in sustaining cost is pretty low. It's about $675 per ounce for the life of mine. This year, our all-in sustaining cost guidance is between $850 and $950. That's because of the highest strip at the beginning. And the project has very strong economics. So we're aiming to produce about 100,000 ounces a year over the next 4 or 5 years at a low all-in sustaining cost. So at today's gold prices, it's a very cash generative. We had an initial $54 million senior debt facility. By the end of this year, we'd have paid back half of it. And then we can look at maybe restructuring it or paying it all back next year.
Awesome. Okay. And what would be the idea of potentially restructuring it? Is that so you can free up some more cash flow to build up the mine life a bit quicker?
Yeah. So, you know, there'll be about $27 million left, about 50% left. And, you know, with a rapid repayment or cash sweeps, it would mean paying it all back next year. Whereas if we stretch it out over a 3-year period, for example, it means there's a lot more cash left over for accelerating exploration, ramping up exploration near the mine in Nigeria, and also on our second project in Senegal.
Okay. And where's I guess the thing, obviously, with it being a 5-year mine life at the moment, I guess investors looking at this are hoping that this can grow. Geologically speaking, is it open at depth? Is it open along strike? Where is the room for growth?
Certainly open at depth. You know, we haven't closed out the resource by any means. We drew a line in the sand and tried to get the project finance. Fortunately, we managed to get that over the line. And then now we knew once we were in free cash, we could come back and start chasing these high-grade shoots down at depth. So that's one area of growth. We're also looking near mine at satellite deposit opportunities. We have a number of anomalies which we've poked some scout holes in, but we're looking to ramp up the drilling there. And obviously, as a first mover in Nigeria, we've acquired a lot more ground regionally, about 1,400 square kilometers, and we're kicking off exploration there. So exploration is being ramped up in Q4 this year. Hopefully, we'll be able to update the market with drill results through Q4 and, you know, on a continuous basis.
Can you give us a bit of a sense of what this exploration plan will look like in terms of how many meters, how much cash are you going to be putting? Like, how big of a focus is this for the company?
It's a very big focus. It's hugely important. And, you know, to say how much cash, it's how long is a piece of string. Because if we find something nice, we're obviously going to deploy more cash. But initially, we're going to set aside about $4 million towards exploration.
Okay. And how much of that is going, say, how much of the priority is opening this up at depth rather than looking at these regional plays or satellite deposits, for example?
The open pit deposits, we think, you know, a slightly lower hanging fruit, really, because the infrastructure requirement is almost minimal. You know, it's just haul roads back to the mine. And I like to refer to them as super ounces because of that. And they're incredibly accretive to the project value, NPV. And going down at depth, that can work in 2 ways. We can deepen the pit and then transition into an underground. So we think, first of all, let's see how much we can go, how much deeper we can go as an open pit before transitioning to underground.
Sure, that makes sense. And then obviously, a bit further away, there's the exploration prospect in Senegal. Maybe you can touch on that. And why did you pick up this license, and why are you excited about this one?
Yeah, look, it's a diversification in terms of jurisdiction, and ironically, the Senegal project is our original project in the Thor portfolio. We acquired Segilola, but that was further along the development curve. So we've always had belief in this project in Senegal. It's a different type of deposit. It's larger in terms of ounces at the moment, but it's a lower grade. And it's a diversification in jurisdiction. It's a diversification in terms of stage of development. And we believe, it's a good position to be in as a single mine producer, not necessarily having to go out and acquire a new project. To build a second project organically is very possible with this project in Senegal. So we hit our first major milestone last year, which is a maiden resource. We're pushing that forward. We're currently in the middle of a 25,000 meter drill program. That's going to culminate with various studies, our MET drilling, our geotech drilling, and we're going to get an economic study done once this drilling is finished, and then hopefully see where we are. We have just finished acquiring some great mine building experience. We have the personnel, we have the relationships with the contractors. We would love to be able to go out and replicate what we've done in Nigeria and Senegal.
Okay, awesome. And just to finish off, I mean, you've mentioned quite a bit of key milestones that are upcoming, but just to summarize, I mean, what can investors be excited by over, say, the next 6 to 12 months?
I think first and foremost, the fact is that we're underpinned by such great cash flow. That's a significant amount of value over the next 4 years, about between $300 and $400 million if we find 0 additional ounces of gold. So I think that's the first underpinning platform of value. Secondly, the fact that we see there's a lot more growth in Segilola to go from 5 years, hopefully to 10, 12 years, the first pass. Thirdly, the fact we're a first mover in Nigeria and we're looking at some very exciting targets that are on a more regional basis. And then fourthly, the fact that, we don't believe there's any value currently for our Senegal project priced into our share price. So we think the continuous release of good drill results, reaching the next milestone of an economic study should trigger some share price positivity.
Awesome. All right, Segun, thank you for your time.
Thank you very much.